Okay, extraordinary items. Just a couple things that you got to know. First off, what is the definition of an extraordinary item? An extraordinary item is anything that fits all three of these criteria. It has to be material, it has to be unusual, and, being an important word, it has to be infrequent. Now, the CPA is never going to make you make a materiality threshold judgment or a frequency judgment by yourself. Okay? It will tell you, or it will imply, whether or not something is unusual, infrequent, and material. And you'll see that in a couple minutes, how the CPA actually goes ahead and does that for you. But you're never going to have to make the judgment by yourself. You just need to know it needs to be all of these three things in order to be extraordinary. It also needs to be under US GAAP. That is very important. IFRS has no classification of an extraordinary item. This is talking US GAAP only. Does the extraordinary item classification exist? Okay, so what is an extraordinary item? What is an example of an extraordinary item? And there is a golden rule here, which is anything that explicitly states or implies unusual and infrequent. It can be any event whatsoever. If the CPA says that it is unusual and infrequent, it is an extraordinary item. Do not ask questions, just know that. Okay? Other common examples, natural disasters. Natural disasters can go both ways. They can be extraordinary, they cannot be extraordinary. But the CPA will have to imply one direction or another, whether or not it is frequent or it is infrequent. And go back to the golden rule. Anything that implies or states unusual and infrequent is infrequent. So natural disasters is a big one. Prohibition of a product by a newly enacted law. The CPA exam likes to ask about that and not give any more information. So know that prohibition of a product qualifies as an extraordinary item always, as does expropriation of an asset by a foreign government. That is always going to be extraordinary, regardless of the circumstances. So just know those, and know that anything unusual and infrequent, automatically extraordinary. What is not an extraordinary item? Because the CPA has a couple tricks of things that think they look like they might be, but actually are not. So 1, a loss due to a major unexpected currency devaluation. Pretty much anything talking about foreign currency is not going to be extraordinary. So even though they say major unexpected, it is not an extraordinary item. Know that losses due to major unexpected currency devaluations or foreign currency related transactions are not extraordinary. Losses due to labor strikes or any kind of strike by employees is not going to be considered extraordinary. A write-down of an asset, such as goodwill or inventories, that is part of continuing operations, that is not extraordinary, no matter how infrequent it may have been. A gain or loss on the disposal of a business segment, that can either be discontinued operations or it can be continuing operations, but it will never be extraordinary. Very important. Gains, loss on disposal, never extraordinary. And another big one, early extinguishment of long-term debt. If the CPA exam throws that in there, assume that it is not an extraordinary item. Unless, of course, going back to our golden rule here, it is explicitly stated that the retirement was unusual and infrequent. That supersedes everything. Unusual and infrequent, automatically extraordinary. But for the most part, early extinguishment of long-term debt, that is not going to be classified as an extraordinary item. So once we've identified what is and isn't an extraordinary item, how do we account for them? There are just 2 rules that you need to memorize. Commit these to heart. 1, reported after discontinued operations on the income statement. And 2, reported net of tax. That's it. It's simple. Just memorize those for the love of God. Okay? If you remember the IDEA, idea mnemonic for the income statement, you have income from continuing ops, followed by discontinued operations, followed by extraordinary items. So they're after discontinued operations on the income statement, and they're reported net of tax. Okay, that is, you will definitely have a problem of some sort where you need to know that extraordinary items are reported net of tax. You might have a simulation where you're filling out an income statement, and extraordinary item, you've correctly identified one, and you're going to remember to put it under discontinued operations, but you might just forget that it's reported net of tax. So please remember, net of tax after discontinued operations. And another little point right here. Sometimes a CPA likes to throw in an unusual or infrequent item. So it'll say something is infrequent but not unusual. And if that's the case, you want to report that as a separate line item as part of continuing operations. So unusual or infrequent, you know it's not extraordinary because it has to be all three, material, unusual, and infrequent, to be extraordinary. But unusual or infrequent, separate line item, income from continuing operations. Just know that. That's not really part of this lecture, but it kind of ties in and it's good to know. So let's take a look at a couple CPA questions. This is a retired question from 2009. Jordan Company had the following gains. Gain on disposal of a business segment, foreign currency translation. What amount of extraordinary gain should be presented on Jordan's income statement? So it's asking for what amount of extraordinary gain. Gain on disposal of a business segment, never extraordinary. Foreign currency items, never extraordinary. 0, A, answer. Very simple. And these are the kinds of CPA questions related to extraordinary items that you're going to see. So let's take a look at another one. This is a 2010 retired CPA question. How are discontinued operations and extraordinary items that occur mid-year initially reported? So this is asking for how you're going to report this on your 10Q, right? So, or your 10K, depending on what the answer is. So let's take a look. There's disclosure. A and D are talking about disclose them only in the notes. B and C are saying include them in net income and disclose them on the notes. So we know that extraordinary items are reported as part of net income. So A and D are automatically incorrect. We know it's part of net income. That's part of the definition of it. That's how you account for it. And B is saying you disclose it in the notes to the year-end financial statement, so only the 10K. And C is saying you include it in net income and disclose it on the notes to the interim financial statements in the 10Q. Now, just a rule of principle here, you always disclose more information. So C you would think that would be the right answer just because it's saying disclose in the 10Q also. And if you go back to our definition of extraordinary items, they have to be material in order to be an extraordinary item. So a material item, yes, it needs to be disclosed in the 10Q. So C is correct, and the rule of thumb of disclosing more information holds true on this question. So C is the answer right there. And now let's take a look at one of my questions, a CPA magic question about extraordinary items. So if you look at the last sentence first, which is how you should read long CPA questions, you should automatically read the last sentence first. What amount of extraordinary loss should be presented on Antares's year one income statement? So we're looking for the amount of extraordinary loss, and we have this information here. So okay, first item, loss from flood damage. Now that alone is not enough information to make an extraordinary item classification. So let's take a look at the supplemental information here. Antares has been located in Madison, Wisconsin for 25 years and has never previously suffered damage from flooding. This is a good example of the kind of syntax that the CPA exam might use in relation to extraordinary items. So 25 years, is that material? Is that infrequent? The answer is yes. That is infrequent, because the CPA will have to give you information implying frequency or infrequency. You don't need to make the judgment yourself. So if it says anything more than 5 years, if 25, it's automatically infrequent. Don't even worry about discussing, hey, is that material, is that infrequent? If they're giving you information that implies a duration of time, assume infrequent. So I'm going to say it has never previously suffered damage, unusual, 25 years, infrequent. That is extraordinary. So that 200,000 loss is extraordinary. Loss from a significant unexpected labor strike. Never. Strikes are never extraordinary. Get it through your head. No. Loss from early retirement of outstanding bonds. Now remember the rule of thumb on early extinguishment of long-term debt. Not extraordinary, but let's take a look at some supplemental information here. Early retirement of long-term debt has become a common strategy for Antares. So it's not unusual and infrequent. So absolutely not. That's not going to be extraordinary. And then our fourth item here, gain on sale of corporate HQ during relocation. That's not going to be extraordinary. That's just the gain on the sale of an asset or possibly a discontinued operation. But remember, gains on sales of assets are not extraordinary items. So that's not either. The answer is going to be B, 200,000, the loss from flood damage being the only extraordinary item. So remember, just to recap, U.S. GAAP only, extraordinary items only under U.S. GAAP. You could have a question like the one we just had before, and it could say, Antares Corporation prepares its financial statements using IFRS. What amount of extraordinary loss should they report? And you'll have figured out what is and isn't extraordinary items, but you'll just not read that line and you'll get the question wrong. The answer is 0 if it's IFRS, because IFRS has no extraordinary item classification. Remember that they are reported net of tax. When you do that task-based simulation and fill out an income statement and you have to put an extraordinary item in it, remember to put it net of tax. Very important. And third, just remember the exceptions. Remember that labor strikes are never extraordinary. Foreign currency items, never extraordinary. Prohibition of product lines by governments, always extraordinary. And expropriation of assets by foreign governments, always extraordinary. So pretty simple. Just remember what you got to know about that, and you'll do fine. So let's move on.